Hey everybody, Steve Olson here with the Investors Corner podcast, and I've got Ryan Bowers, the alleged CEO of the Peak Group, with me here. He's had a long day with some of our investors in town, but agreed to join us to have a conversation about something we're really excited about. Ryan, how's it going today?
It's going good. It's going good. Got to be out on some of our new flex sites today, and it's fun to see them coming together and getting tenants in and moving out the door. So good day.
Good, good. What's the weather like in DFW today?
I tell you what, it was windy today. We were out on a site where they're trying to put these massive, pieces of metal on the roof, and you couldn't have paid me enough money to get up there. It was so windy. It was like holding a parachute. So,
Yeah.
yeah, it's a little windy today.
Yeah, I'm glad I wasn't there doing that. Not that I would know how. Yeah,
Yeah, we're better here.
good. Good. Well, everybody, I've got Ryan on the show today because, years ago, before we officially started working together, I was in Dallas visiting with Ryan, and we went and saw a bunch of sites and a bunch of dirt. And we kind of had this conversation. I don't know if you remember it, Ryan, about, residential's great. We love it. It's our bread and butter. But it would be cool, where is the opportunity in commercial or industrial for small Main Street investors? Because typically, if a Main Street investor wants to do industrial or commercial, they've got to be either the developer or a limited partner in the syndication. And so there's not a lot of opportunities for them to just control that kind of an asset. And we thought, well, flex space would be pretty cool. Fast forward, and here we are. We've got 10 doors completed in Weatherford, another 5 if the roof doesn't blow off here any minute, and then probably 40 more right behind that. And that's just one of the projects we've got in the pipeline. And I think the investors would really like to know, Ryan, why are you so bullish on that? Because you're the one signing on a lot of this stuff, so you must like it. What do you think?
We really do. We just love as this group is. We know residential is great, right? And I always say I don't know that Jeff Bezos is going to figure out how we live on Amazon. So as long as that's not the case, residential is great. But what is the commercial side that goes along with that? And we really believe it's the small bay flex space, or the ability to deliver in these massive growth areas a product that has so much variety and flexibility, thus the name, to what can go in there. And so we are becoming a society more and more where we want instant service and instant things taken care of, right? And so whether that's last mile shipping, whether that's all the services we get at home, whether that's my small business that I want close to my home that I'm servicing everybody else on, the demand for this just continues to grow and grow. And so, this is a space where this product really stopped getting built in most areas back in the 80s. And so, there was a long period of time where there just wasn't a lot of this developed. And now when you look at explosive population markets like a Dallas Fort Worth, there's just a huge need for this type of product. And so we're excited about it because we don't think that people's desire for service-based businesses and needs, and we don't think that small business is going to stop growing. And so the need for this really has a pretty long runway.
Yeah, I think they joke out there that Best Buy is Amazon's showroom. And that's, my point being, I'm sure a lot of people who've listened to this have gone to order something online. They see, oh, it's going to cost me shipping and it's not going to be here till next week. Let me see if Amazon has it. And I'm a Prime member. I pay no shipping. It's that instant gratification, and you need those last mile facilities and to be able to make that happen.
Yep.
Yeah.
Yep.
I want to talk briefly about the types of tenants that we're seeing apply, because we just barely got C of Os on 10 of these units, and I think any minute we'll have approvals if we don't already. And then I want to talk about the triple net component. So what are you seeing in the way of small businesses there in Weatherford, Texas, that want to inhabit this space?
Yeah. been really interesting. It's easy to think about, if we go on and Google or chat, if you will, and say, what goes in these? And of course, we think of the trades first, an electrician or, some type of carpenter or service business that would go in there. That's kind of the natural. Sometimes we go to automotive. Now, we won't be doing straight automotive services because we don't want to clutter up these beautiful sites, but we would do, say, aftermarket products. Window repair has come to us. We've actually had two different window repair companies, auto repair, come to us that want to work out of there. They're mobile systems, so they need a place to have some storage and office space, and yet be able to take off
No
and go do
rusting
their thing.
engines in the parking lot.
That's
Yeah.
right. None of that. And
Right.
so we think of all those things, and then we start thinking about all the gym space, right? And so you
Yeah.
have everything from, all of the personal training type of things, your CrossFit gyms or your personal trainers and everything that goes into that. But then we have all of the sports stuff. We had, I took my youngest son to a training facility that was a flex-based basketball court, and so the club that was in there had built one and a half gyms within a building, and it was a beautiful facility. You've got baseball, and of course you can do volleyball in that type of gym. You're seeing pickleball courts go in these things. One of the guys that was with us today, his kids go to a Ninja Warrior
Yeah.
training thing.
Yeah.
Apparently that's getting to be really big, and they're popping up all over the place. And so where he takes his kids is in a flex building where they built out Ninja Warrior. And then you start getting into just all kinds of service things that I would consider almost like a one-off. For instance, garage door would be kind of in that service. That's one that's going to move in here, but dog grooming. We
Yeah.
have drains in all of our units, and so they could have the cleaning stations in these. Detailing, because of that, would go in here because they need that. We've had boat detailers want to come in here. Party planners, right? So these
Mm,
people that are running parties for people and events, they need places to store all their stuff. And
true.
along that, we have somebody looking at it with a jump house company, right? And so they've obviously got to have a place to store all their jump houses when they're not out doing the parties. A lot of last mile stuff. So you have people that maybe are doing delivery things to homes and they need a place to ship that out of. Or I think one of the most unique ones we've had so far is we had an influencer that sells golf equipment.
Mm,
And so he's online all the time and just selling golf equipment. Says does about a truckload a week. And so, that's an interesting twist on that. And so, the variety of businesses that continue to come in Weatherford, uh, all by itself, which is, kind of a suburb out west of Fort Worth, is really interesting. Just the more and more that comes to the table with the variety of what people are looking for.
yeah. People and stuff, in spite of AI and all everything going on, people and stuff still need somewhere to go or to be
That's right.
stored until we literally become the Matrix. Remember in the Matrix, they've got all the people in those pods and they're not living in
Yeah.
reality, and we just store all the
Yep.
humans there. I guess we'll get into human storage if it comes to that. But until then,
Yep.
when people are moving around and they need to go
That's
somewhere
right.
or they need to buy something, you need these kinds of spaces.
That's right.
Yeah.
And from a standpoint of what we do as investors, we had sent this out to the team here about a month ago, but there was an article in the Wall Street Journal around JP Morgan and what they're buying. So the largest bank in the world is buying three things. They're into housing. Now for them, it's large apartment complexes, right? We're on a smaller scale. We like our houses and our duplexes and our quads. They are in industrial space because there's always going to be a need for what we talked about now. Small bay industrial flex space, small scale compared to that, and that's fine. And then manufacturing. Well, we can do light manufacturing in these as well, which we really didn't talk about, but that's another component for somebody that needs light manufacturing. So I look at it and go, well, hey, if the largest bank in the world has, these three focuses of what they're buying to own themselves, and we kind of shrink it down on a small
Yeah.
investor, largest bank in the world perspective, it's in that same vein of where we're going. And I think that brings a lot of validity towards owning both residential and flex space.
Okay. So we'll put an asterisk on what I'm about to say next because anything can happen in development and when you're under contract on a site. But we've got a number of new sites for flex space coming. There's
We
still
do.
still months out there. So the focus will be Weatherford for a little while here. But where are these sites at, Ryan?
Yeah, so we've got actually one we just started development on here recently in North Richland Hills, which would be more in the core of the Metroplex. We're excited about that site. We're going to have one coming here that will start on mid-year in Flower Mound, which is also core, very, very close to the Dallas-Fort Worth Airport. That's going to be much more of kind of a Class A site. And then we've got what I think is going to be a fantastic project out in Waxahachie, which is south of Dallas. So kind of Weatherford is our suburb out west that we're developing the current site in. Waxahachie is out south of Dallas. That's booming. We're having a very large D.R. Horton development getting put around us, and we're just off the freeway that goes into Dallas. And so we have right now in the pipeline just over 200,000 square feet that will be delivered here over the next couple of years.
That's great. So one thing that we've really loved about this, because we when we talk about investing in real estate in Texas, two things can be true at once. Number one, the taxes are really high and the insurance is really high. And so we've set this up as a triple net component where the tenant is responsible for payment of maintenance, taxes, insurance, and even down to the HOA dues, right? We have a small HOA in these projects. So from the perspective of an investor who is used to buying, say, single family homes where their property manager sends them a statement from Appfolio every month. We collected $1,500. The management fee was $150. Here's your money. How is this different?
So the difference is a tenant in a house just pays what you said, the $1,500, right? That's a gross lease. I'm just paying one thing. The owner's paying everything else. Then we have triple net, which is saying we have a base rent, and then we have our pro rata share of all of those expenses that you just mentioned. And so the base rent is really what goes to the owner, and then we pro rata share back to the tenants their pro rata share of the property taxes and the owners association and the insurance and the maintenance on that. And they're responsible for all the maintenance inside their unit. And so even the management fees are inside that. So it becomes very cost effective for the owner to really understand what they're going to make. Our leases are on average 3 years. In fact, we already got a request on one of the tenants that's looking to go in to do a 5-year lease on these first units. And so, they're saying, hey, we want to be here. We just want to lock in, our price increases and let's go because we think this is a good deal. And so, being able to have, say, an average of a 3-year lease and those expenses paid for, boy, that gets really easy to start figuring out what you're making. And, we're selling these at a 6.5 cap. Well, we know we can't sell brand new residential construction in DFW for a 6.5 cap right now. And
Yeah.
so even in that, even though the expenses are factored into what we're estimating for that, we still really don't know. Does our tenant bail on us? Do they stay? When's the turnover? How much is the turnover going to be? And so, there's benefits obviously of both, but adding this really adds a great stability to a portfolio that we also believe has very good appreciating value over these next several years just because of the supply and demand for these things. And so, for instance, you look at these units, our units are all 1,350 square feet out here in Weatherford. With our base rent and our estimated triple net costs, they're going to pay $1,950 a month for that unit. I mean, think about a business that gets storage space and office space in a beautiful looking park. Less than $2,000 a month is a very low expense for that small business. And so, that's where it gets extremely attractive, where they can even grow inside these. Hey, I'm growing. I need 2 or 3 or 4 or 5 units. Each one of these buildings has 5 units they could expand up to for 6,750 square feet. And so, it's very attractive for the tenants that are leasing, and it's very attractive for our owners to get in.
So as I understand it, too, in the back of the units, the ceiling is tall enough to put in a mezzanine floor, get some extra office
That's
space
right.
or some extra storage.
That's right.
And it would
Yep.
be the tenant's responsibility to build that out because it's flex. They want to make it that way. Yeah.
Yep. Yep. So we have kind of a base standard package
Yeah.
that is built into the cost that we're factoring into our sales price. If the tenants want something above that, then they're going to pay for that through their tenant improvement package.
Yeah. And everybody, what he's saying is base level typically would include a small office and a bathroom,
Yep.
which is included in the purchase price for one of the properties at purchase price like 255. And like Ryan said, you buy this on a cap rate, so you can reserve it. And then the purchase price is calculated based on the lease that is ultimately signed, which is great because, when you're buying construction, new construction, sometimes that lease isn't as much as
Yep.
you thought. It protects us too if the lease is much higher, right? But you're getting that 6.5% cap rate. Talk to me about CapEx and how that's
Yeah.
handled in a triple net situation like this.
Right. So we have some of our CapExes would be within the owners association, right?
Mm-hmm.
So any of the common areas, the full buildings on the exterior, driveways, landscaping, all of those things would be a part of the owners association in our CapEx that we're accumulating in there. Owners are responsible for everything kind of studs in, if you will. And so if it's something inside of that, those CapExes, maybe a water heater, there's the mini split unit. There's not much inside of these things
Yeah.
that are going to have to replace out. So there's not a whole lot to it, but the inside would be the actual owner's responsibility. But the whole exterior and the site itself are going to be funded through the owners association.
So a tenant leases up 3 years from now. Let's say that they built in that mezz piece. They did some other modifications to the unit. It's now their responsibility to demo that and return it back to its shell so that the next tenant can do whatever they're going to do. Am I understanding that correctly for the listeners?
So that would come down to the lease. So let's look at a couple scenarios.
Yeah.
Let's just say, let's take two scenarios. Somebody comes in, they're like, "Hey, I want that mezz because I want the other space." Well, we're not going to make them take it out because we would rather have that there because it's probably a benefit for the next tenant coming in.
Mm-hmm.
That's an upgrade to that unit. And so as the owner of that unit, I'm going to keep that. Um, let's say somebody put in a bunch of dividing walls and gorilla racks because they were shipping stuff and that was part of their tenant improvement. We would put in the lease, you need to clear all that out when you're done because that's not anything we're going to want as we go to lease this space again.
Got it. Got it. So it's handled in the lease on the front end, and then it's a discussion
Yep.
with the owner on the back end of, hey, Bob's plumbing is moving out. We think it would be advantageous to leave this mezz piece in there. And is that how you want to go forward? And it's a dialogue with the property management team.
Yep.
Okay.
And again, that'll be in the lease up front because again, if it's something like mezz, which mezz would be the most common thing,
Yeah.
right? Or a few extra offices downstairs. And the offices would really be, that would be an owner question that we'd go to and say, look, they're putting in, we have the one standard office, but they want two more offices built into this and have smaller storage space. Are you going to want to leave that when they're done?
Yeah. Okay. Okay. Great. So the investors that listen to the show, like I said, a lot of them are residential investors. They're used to thinking about this in terms of I can charge $1,500 in rent. When we're dealing with commercial and industrial like this, it's by the square foot. And when it's triple net, that number is going to look pretty low because the tenant has a bunch of expenses on top of that you normally would be paying as the landlord if it wasn't triple net. What's the market research looking like in Weatherford? These tenants are biting at what price per square foot?
Yeah. So we started out a little bit low here. We're at $13 a square foot to build up the demand. As you know, this site is going to be a total of about 90,000 square feet. We're delivering the first 20,000 square feet right now. And so we're getting the ball rolling. Our report from Colliers says we should be at 1450 today. So the benefit really is to the owner, right? If we're leasing at a lower price, you're still getting your 6.5 cap. And if we really start leasing as we move through the project 1450 down the road, you're going to have a huge jump in equity because you're going to jump that, which is going to give you great appreciation value, right? And so for us, it's building this steam. So a lot of traction at the $13. we're I think about $4.30 is roughly where we're at on our estimates for triple net. On top of that, so they're 17 and change, pushing $18 a square foot in their total annual cost per square foot.
Okay. Okay. Are you seeing a vastly different number as you get into Flower Mound, Waxahachie, North
Yes,
Richland Hills? You
yes.
are. Okay.
So if you look at, out, call it 13 to 14 square foot in Weatherford, our Waxahachie, our report there is that we should be closer to 15. Now, I think we'll probably start there at 14 and move up. That's another 80,000 square foot project. North Richland Hills, we think we're going to be in the 16, $17 square foot range. And Flower Mound, we think we're going to be between 18 and $20 a square foot.
Hmm.
Now, I'll also say this, we're like North Richland Hills is a little bit more of a micro site. It's going to be about 1,000 square feet with mezz in it. And so the smaller size, we can raise the square footage cost. Um, it's a smaller site. It's only going to have 13 units in it. And so it's not like we're trying to lease 50 of these and
Yeah.
there's nothing around this in the city. So we're going to go a little bit smaller, charge a higher price on it.
Gotcha. On the last couple of episodes, I've been letting the cat out of the bag about potential new markets where, Peak, because of
Yeah.
our history, we've got a good, unique ability to partner with builders, to, of course, be
Yeah.
our own contractor, which we are in Birmingham. Are we looking at any other markets for Flex?
Yes, we are. So we'll actually be in Savannah next week. We've had very good success on the residential side in Savannah. We've got a great partnership there with a developer builder. And so we're going to start taking Flex in to add to his residential side as well. And then from there, we're going to head down to the Tampa, Florida market. And so if you look at a lot of the national reports, um, Tampa, Orlando, MSA is one or two on the list of the hottest markets for flex space. DFW is two or three in most all the reports. And so when we look at DFW, we believe we've got a great runway here. And we believe that Tampa, Orlando is probably the next really great spot to be in over the next several years. Savannah's great just because Savannah's great. We've got some sites through our developer close to the gigafactory that Hyundai put in out there, and they haven't even started getting all their suppliers there yet. And so we think there's going to be a huge demand for flex space just for the suppliers that supply Hyundai and then the suppliers that supply the suppliers that, take care of all that. And so that's what we're looking forward to. And those probably being our next two markets.
Gotcha. And I'm hopeful to help get the third one going. I'm
That's
relocating this
right.
summer out to Tennessee, and we'll hopefully
Yep.
see some work happening out there too.
Yep.
This is great. I mean, it's intended to just be kind of an overview of how this works because it is a little bit different. But I tell investors all the time that, real estate is fee simple real estate where you are the owner is never completely passive. When people say, oh, it's passive, they don't own any or they haven't had any problems yet,
Yeah.
right? But I would say that triple net flex is about as passive as you could possibly get. You tend to agree?
I really do. And not only from the passive standpoint of longer leases, triple net and all that commercial has, it's hard to beat these buildings up too much, right?
Yeah,
It's not
yeah,
like I've got somebody living in my house with four kids and, we're just beating the crap out of everything and don't care how we leave the house. That doesn't happen a ton, but it happens, right? Or just wear and tear over time. It's just these buildings are mainly all metal. You've got an office and a bathroom, like, it's
yeah,
hard to beat these up. And you've got owners in these that generally, for the most part, have a high level of respect for the business that is theirs that they want to present well.
yeah, correct. It has to look good.
That's right.
Customers or employees are
They want
coming.
to
It's not
succeed.
like your house where
Yep.
you can just be a hoarder if you want to.
Yep.
Yeah.
That's right. Yep.
Well, this is great, Ryan. Any parting words about the flex?
We're excited about it. We've been residential guys for 25 years. We love residential, and that's not going to stop, like I said before, but we just think this is a fantastic opportunity, even to get a little bit better yield. We think there's going to be great appreciation play and to diversify our portfolios, which is always a good thing too.
Awesome. Well, I've got a 1031 potentially coming up in the spring. I guess I will just call myself and grab a couple of these, but
There you go.
I like that passive component. So thanks for taking some time to visit with us today, sir.
You bet.
Okay.
Have a good one.
See you later.